Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm going to go on with my video series about investing in emergent markets with European ETFs. And in this third part, I'm going to talk about ETFs that have a focus on ESG norms. And in the last video, I forgot about what the G standard for, but it's the E is environmental, the S is social, and the G is for governance. So I'm not forgetting it now because I'm making the video right now, of course. So the emergent markets, I went over this the past two videos as well. So you have the definition here. Here you have the 10 largest countries that are emergent markets. So you have Brazil, China, India, Indonesia, Mexico, Poland, Russia, Saudi Arabia, South Korea, and Turkey. And then those acronyms, so the big countries are the most important ones, so Brazil, China, India, and Russia. But you have all these other acronyms that you can find as well. And in total, there are more than 50 countries that can be called emerging markets. But as I said in the other videos as well, in these videos, I'm discussing ETFs that invest globally in emergent markets. So not solely in China or in India, but really the focus is on all the countries there. So in total, I found 23 ETFs that are based in Europe. But if you know of any other European-based ETFs that I missed, please let me know in the comments down below. I am always happy when I can find new ETFs and that I didn't know before, and then I can include them in my next videos as well. So thank you for doing that. The MSCI index was the most used index, which I discussed in part 1 of this video series. So if you haven't watched that one yet, certainly do that after completing this one. And at the end of this video, because yeah, these ETFs, they have all kinds of indexes that they track. They make up their own index as well. So in the end, I look at the performance of these ETFs. I look at the dividend yield of the ETFs and also the total expense ratio to make an overview of them. And in this video, I will discuss, as mentioned earlier, ETFs that have a focus on the environmental, social, and governance ratings of the companies where they invest in. So the ESG ratings, and also one ETF that is a special one, and that's an ETF that invests according to the Sharia principles. So that's for Islamic people that want to invest their money. They can do that then in the one ETF that I'm mentioning here. And another thing, so all the data that I'm mentioning in this video, all the data are as of at the end of the trading day of the 16th of February. And that's so that you can compare all the data from all the videos in this series compared to each other. So, and then of course we have the other rules that I mentioned in the previous videos as well. And the main thing is in fact that the dividends are in US dollar. Some ETFs I can only mention in Swiss francs because I took the one from the 6 and there is only Swiss francs available there. Then I put them here in Swiss francs. But otherwise, I am always using US dollar as well for the ones that I took from the London Stock Exchange. And another important thing is that all the performances are based on the US dollar currency. So when there was just the Swiss francs available, I also converted those in just ETF towards US dollars, so I could make a better comparison between the performance of the ETFs that I'm mentioning today, and in the previous video and in the video that is going to come. So the first ETF that I'm going to talk about is the LNG one. I already discussed this one, so it's part of the dividend ETF video that I discussed previously. So it's the LDME with a total expense ratios of 0.45. It's noted on the 6 stock exchanges in Swiss francs, and it invests in 417 companies with 16 million invested in it, and it's a sampling ETF. So it's a recent one, so we have to wait another 5 months before we can talk about the 3-year performance. But the first year performance is 13.75%. So the past year performance is 13.75%. It distributes 4 dividends per year, and the dividend yield is 3.65%. And these were the distributions in the past year. Then we have one from the London Stock Exchange, from BlackRock. It's the ISDE ETF, and that's the Islamic one. So not ESG based, but Sharia based. And you see that it's the second one that I mentioned. So it's quite up there in the performance in this video. The total expense ratio is 0.35, so that's quite nice. It's on the London Stock Exchange, so it's always a US dollar. It invests in 327 companies. There is 232 million invested in this ETF, and it's a fully replicated one. Here you can see the past year performance. It's quite nice, so almost triple of the MSCI index itself. So it's MSCI Emergent Markets derived, but it took only the companies that obey the Sharia law, so or the Sharia rules. So there is a subset of 327 companies out of the 1,400 in the 50 that are in the MSCI Emergent Markets Index. And the 3-year performance is minus 16%, so it performed 8% better than the MSCI index itself. And then the 5-year performance is 23% up, almost 23.5% up, compared to 10%, around 10% for the MSCI index. So it outperformed those for sure. It gives 2 dividends per year, and it's in May and November, and the dividend yield is 2.74%. And the distributions are quite even as well, so that's quite nice to see as well. Then we have another one from the London Stock Exchange from BlackRock. It's the SEDM, and this one does have a lower total expense ratio. So I wish they could lower the one from the previous video with their dividend focus one from 0.65 or what was it, 0.63% to also to around 0.20%. And so it's the ESG screened one, and EME. I don't know why they do that. Right? The IMI index. Why they put it in the name? It's just the investable market index. So it doesn't say a thing. When it wasn't investable, you couldn't make an ETF from it. So I think it's a thing that they should always skip in the name. The most important thing is that it's ESG screened, and it's noted on US dollar on the London Stock Exchange for $5.43. So in this video you will see that there are a lot of ETFs that have a cheap price, which you know that I like, because then you have a less overshoot every time you reinvest your dividends. And then it invests in 2,309 companies. So actually it's ESG screened from the core MSCI index, but the core they don't find important. It's the the IMI that they find important here. It's 305 million invested in this ETF, and The past year performance 4.30%, so a little bit higher than the MSCI index itself. The 3-year performance 2% better than the MSCI index, and the 5-year performance 4% better than the MSCI index. It distributes 2 dividends per year in June and in December, and the dividend yield is 2.34%, so that's more in line with the MSCI Emergent Market Index. And these are the 2 distributions that it made last year. So we have to wait until June to have the first distribution in 2024. So 4 more months to go. Then we have an EEDM from BlackRock. So the 3rd BlackRock fund for today. Also with the total expense ratio of 0.18%. And this one is the ESG enhanced ETF. So it's also from the London Stock Exchange, also with a cheap price. Excuse me, a cheap, I say cheap, but I should say low, because cheap, you can't really assess that in an ETF. Then there are 1030 companies in this ETF. So this one is really related to the MSCI Emergent Market ETF index. The other one should have been named the core MSCI Emergent Market ESG screened. But yeah, I'm going to shut up about IMI thingy in the name that I really don't like, but okay. 640 million is invested in this ETF, so a little bit more than in the previous one from iShares. And the performance is way lower than the MSCI indexes ETFs that we discussed in the first video. So almost half for the past year, and 2% worse than the MSCI Emergent Market ETFs over the past 3 years. It distributes also 2 dividends per year in June and December, and the dividend yield is 2.40%. And here once again, we have to wait this year another 4 months until we see what the first distribution is going to be for 2024. But these are the ones for 2023. And then we have another one from the London Stock Exchange. So compared to the previous video, where almost all of them were noted on the 6, in this video there are a lot of them noted only on the foreign stock exchanges, and I take then the one from London, of course. But you can find them sometimes as well in Paris, and sometimes as well on the German stock exchanges. And the total expense ratio of this one from Vanguard is 0.24%. And once again, a low price one, so 5.81 US dollar. It invests in 3,312 companies, so that's really high, especially because it's ESG, so they screened for it, and then they still have 3,312 companies left in it, so that's quite amount of companies. Only 50 million invested in this fund, and a performance of 3.80% in the past year. And you see it's it's the youngest ETF among the emergent markets ETF that I'm mentioning in this series. So it started in October of 2022. So definitely nothing happened there with COVID for this ETF. It started way behind the drop that happened due to COVID. It gives 4 distributions each year, has a dividend yield of 2.27%, and these were the distributions that it made in 2023. And then we have the JRMD. ETF from JPMorgan, and that's the research enhanced index. But the research enhanced means that it's also related to the ESG norms. The total expense ratio is 0.30%. It's also from the London Stock Exchange. A bit more money you have to put in there to buy one stock. It invests in 347 companies and only 5 million invested in this ETF. And the performance, yeah, it's also a quite recent one, not that young as the previous one, but yeah, the past year just not 1% up. And since its inception, yeah, that's also not that great. But okay, here there was still a part of the COVID pandemic going on, so especially in the emergent markets. So it's not surprising that there you see a minus appear, a quite big minus appear. The dividends per year, I'm not sure whether or not it's it should be quarterly, but in the past year they only distributed in January, April, and October with a dividend yield of 1.24%. So in July, I don't know what happened there and whether or not they are going to distribute a dividend in July this year. But these were the distributions that they made last year. So 0.0716 was for January 2024 because yeah, they made one in January 2024. I could put the one from 2023 as well, but then I needed another block, and I didn't want to not let this one open because it's important that you know that the one from July was missing in 2023. So, and then we have the one from UBS with a total expense ratio of 0.24, Luxembourg based, and it's socially responsible. So, and once again, yeah, UBS, you have to be UBS to do that, but it's a emergent market one, and it's MSRUSA. Once again, USA in the name for the UBS ETF that invest in emergent markets. So I think it's a strategy of them, but I'm not going to judge them about that. So it's noted in US dollar, and it contains 223 companies. There is 1.5 billion invested in it, so a quite high amount, and it's a sampling ETF. The past year performance minus 0.50% up till now. Yeah, it's the past year, so it's what they performed the past year minus 0.50, so that's actually not great. The past 3 years, they also underperformed the MSCI Emergent Markets Index, and the past 5 years, yeah, they hugely underperformed the MSCI Emergent Markets Index because there it was 10% and this one only has 1.18%. So I don't know what they are doing wrong when they go for socially responsible companies that they select, but this ETF is definitely underperforming the MSCI Emergent Market ETF indexes, index ETFs, I should say. 2 dividends per year. Yeah, it's UBS, so February, August, and a dividend yield of 2.26%. So nothing wrong with that, but the performance here is definitely not okay. And these were the distributions that they made the past year. And I also put the distribution from February of 2023 compared to this year's one. So this year's one was a little bit lower, but once again, like I said in the previous videos, we have to wait and see what the distribution is going to be then in August from this year. Maybe there it's 0.23, and then overall this past year the distribution total went up, so we have to wait and see for that. And then the one with a whole part of explanation that I need to do. So the MSDU from Amundi, also Luxembourg-based like the UBS one, total expense ratio of 0.25. It's based in London Stock Exchange and noted in US dollar. And here you can see SRIPAB, and that stands for the MSCI Emergent Markets SRI filtered PAB index, and that tracks the equity market performance of emergent markets considering only companies with very high ESG ratings relative to their sector peers. So that's important, relative to their sector peers. So it doesn't mean that they have good scores, it means that they have better scores than their sector peers. Okay, that's always better than than investing in all the companies like the MSCI Emergent Markets Index does. So in this regard, you really, how do you say it? You really, make the companies that ameliorate their ESG ratings. You really give them a boost by putting the money towards them and not towards companies that don't pay that much attention towards their ESG ratings. So in that regard, it doesn't seem good because the ESG ratings that it has aren't that great yet, but it does give the incentive to the companies, if they want to see money from this ETF, that they need to take care of their ESG ratings. So in that regard, I really like this kind of fund. It has 177 companies in it, so compared to the Vanguard one where you have 3,300 companies and it's ESG screened, this one is 177, so they are actually really strict compared to the Vanguard one. 180 million invested in it. It's a fully replicated one, but then the performance, yeah, it's really underperforming compared to the MSCI Emergent Market Index itself. So yeah, 7% less the past year, 4% less in the past 3 years. For 5 years, it's almost there. We need to wait another 8 months, of course, to see the 5 years appear, but so far it isn't great. So yeah, a bit sad story for this ETF because I think they are onto something with okay, it's a whole mouthful of course with the SRIPEAB filtered index. It's a quite mouthful, but I think it's a great thing that they give an incentive towards companies to improve their ESG ratings. So only one dividend per year. It's an Amundi one. So once again, they changed from November to December. So there was also 1 month in 2023 where people thought that they weren't going to get a dividend that year. But as I said in previous videos as well, when I mention Amundi, just go to their site and look up your ETF that you have from them. Click on distributions and there you will see when they are going to give them. Normally more or less 3-4 months in advance they say when there is going to be the X coupon date and when there is the record date and when they are going to pay out. The amount isn't always there yet, but you can see whether or not you are going to receive a dividend, and then you don't need to worry for a month when you don't see a dividend appear on just ETF or on the SIX stock exchange or on the London Stock Exchange. So that's an important thing that you know that. So as I said, here you have a lot of ETFs that are noted on the London Stock Exchange or on the Euronext stock exchange in Paris or Amsterdam, or on the Xetra or GetX in Germany. So you need to look up the ticker symbols. You also saw the other ticker symbols between parentheses on the different slides for when I mentioned the ETFs by their ticker symbol that I am always going to use. And in this overview, you can see that the LDME one, so it's also, yeah, it performed the best. So then you have the ESD one, and that's the one that that follows companies that follow the Sharia rules. So if you're, yeah, if you can't invest in any other things because they don't follow the Sharia rules, this one is definitely an okay ETF to invest your money towards too. So the 1 year performance 9.86%. It outperformed the MSCI Emergent Market Index 3 times, so that's quite nice. And also the 5-year performance, it's 2.5 times better than the MSCI Emergent Markets ETF indexes. Man, I'm always switching those two words, but I will improve on that for sure if when I continue making these kind of videos. And then, yeah, MSDU 1 year performance, 2 year performance, it's not that great. Also, MSRUSA from UBS, also not that great. But are they dividend traps? I don't know yet. As you see here, it's due to COVID. It took a huge chunk out of the performance of the emergent markets companies. So yeah, we need to look further into the future to know what is going on with these ETFs. But with that being said, I thank you for watching this video. Please consider subscribing to my YouTube channel. Hit that like button as well if you like, and see you on the next video on my YouTube channel. Bye.